Hey, Mzansi, and everyone listening from elsewhere in the world. I'm Donumdu, the editor at Food for Mzansi. If we had another chance to meet yet, it's lovely to engage with you on this platform, Food for Mzansi TV. And I've really enjoyed our engagements and connecting with all of our experts within the financial field. And I'm joined today by Bertie Haman, the Senior Manager for Agribusiness at Standard Bank. Welcome back to Food for Mzansi TV, Bertie, and it's nice to have you with us again.
Thank you, Dawn. Hello to all the viewers out there. It's a pleasure to be here. Thank you.
Now, Bertie, we've discussed a lot of things over the past few weeks, and our next topic is around the concept of under and overcapitalization and the consequences of being under or overcapitalized. I know nothing about finances. Please tell me what the hell this means and what is meant by overcapitalization, or when is a farming venture overcapitalized?
Dawn, actually, eventually it comes down to very simple concepts. It's just us using very smart words, to maybe sound very clever. But I've made a couple of notes, and we're going to break it down into very simple terms. Maybe just some context. What we've discussed in the past, we initially spoke about budgets, and we specifically mentioned the cash flow budget and the production budget. That was important. Then we spoke about cash flow and profits and the difference between cash flow and profits. Then we spoke about the benefits and the disadvantages of debt. And last time we discussed the variable expense trap. Now, today's topic, we're going to move slightly to more the different part of your business, which is the balance sheet. Previously, we discussed more income statement and cash flow stuff. So today we're moving to the balance sheet. And we're going to highlight the risks if you focus too much on the asset side of your balance sheet and ignore the liability side. And there might be various reasons why we do that. And unfortunately, I think in the agri space, we see this happening all too often. Now, maybe just as a bit of background, the first time that I personally got interested in the whole concept of overcapitalization was many years ago. I heard a conversation between a very prominent farmer and a lawyer, and a prominent farmer very confidently stated that he owes half the district. And the lawyer looked at him and very dryly replied, "Yes, Mr. Farmer, we don't have a problem with you owning half the district. We've got a problem with you owing the other half." And that sort of comes down, and I think summarizes the eventual end state when you are actually overcapitalized. Now, with that background, maybe just a couple of definitions. Now, I think there's different ways to look at a concept of over or undercapitalization. But I think if I look at it, maybe from a finance point of view, the corporate finance people will actually refer to something which they say is the DuPont identity. It's a very well-known concept which corporate finances use. And the DuPont identity brings together the relationship between what they call operating efficiency, asset usage, and financial leverage. Now, those are just big words again, but it actually says how well are you using your assets, how I'm sweating my assets, how much debt do I have, and how lean is my business. But we're not going to do it from a corporate finance point of view. We are going to look at a concept today from the farmer's point of view. And I think, if I look at overcapitalization from a farmer's point of view, it essentially means that a farmer possesses more assets than what he actually requires. So that's overcapitalization. I've got more assets than what I actually require for my purposes. Previously, we referred to the example of planting 500 hectares of maize, and I want to achieve a yield of 4.5 tons per hectare. Overcapitalization can then, for example, mean that my fleet of tractors are actually set up to plant 1,000 hectares of maize. That's double my requirement. And in that sense, the particular farmer can actually be overcapitalized. And undercapitalization is just the opposite of what that overcapitalization is.
Now, what are the consequences of being overcapitalized? On face value, this does not seem to be that bad.
Don't indeed, and I think that is the risk, because just the example that I've just mentioned, I want to plant 500 hectares, and I've actually got a fleet of tractors to plant 1,000 hectares, and that seems to be not a bad situation to be in, but there are actually several very unpleasant consequences of being overcapitalized. And it's no coincidence that a prominent farmer was talking to the lawyer. So I'm going to maybe use some financial numbers to try and explain it. So if the viewers are there, just sort of listen carefully, and I hope I can get us right. So the first implication of being overcapitalized is that you are less profitable than what you ought to be. Now, in an example of planting 500 hectares of maize and achieve a yield of 4.5 tons per hectare, and let's assume a maize price of 2,500 rand a ton, you can generate in revenue of 5.6 billion, if I've done the numbers correctly now, right? Now, with this 5.6 million rand of revenue, let's say you require a return of 20%. Now, what you then do is you take your 5.6 million rand of revenue and divide it by 20%, you end up with a number of 28.1 million. But that is the actual capital that you can have tied up in this whole farming venture of you, with all the assumptions that we've made, to generate a return of 20%. Now, let's say, for example, instead of 28 million rand of capital tied up in your venture, you've got 35 million rand of capital tied up. If I do the numbers again, then you will see that your return now dropped to 16% instead of the 20%. So in other words, if you overcapitalized, you employ more capital than what you should be employing, you're actually becoming less profitable. So that is the one implication. But it unfortunately gets worse than that. Let's say a large part of your capital was actually borrowed from the bank. Now, you will recall in the previous episode, we actually said that agriculture was generally highly indebted. So it's not unlikely that a large part of your capital will be borrowed from the bank. This can therefore mean that you have debt obligations of 35 million instead of 28 million. Now, we've just also said that you are generating a return of only 16% instead of 20%. So in other words, you don't generate any more income, but you have got a higher debt burden. And that is one of the big dangers of overcapitalization. Overcapitalization invariably means, in my experience, that you also have too much debt. And in the previous episode, we talked about having too much debt. We will typically see that farmers who are overcapitalized have to actually go off and sell off assets to repay debt. And in a tough economic environment, that's not always the easiest thing to do.
So less impulse and thinking twice before you put more money in is what I'm hearing. How can I avoid becoming over and undercapitalized?
I think overcapitalization and undercapitalization is, of course, the two extremes. The ideal situation is to be optimally capitalized. So that is what one is trying to, get to. And I think if you pay close attention to the matters we've just discussed, today and in previous episodes, I think you should be already better equipped, to make smarter financial decisions and get to this optimal position, which is in the middle, not being over or undercapitalized. But maybe some specific things to look out for. Again, have a very realistic objective, what you want to achieve. Then prepare a production budget to achieve the objective and try to stick to your budget as far as possible. This is probably where the most risk lies, that bargain or impulsive buying habits. That is something that one really needs to try and avoid because it invariably leads to overcapitalization. It is also very possible that you've maybe paid too much for an asset. And the challenge in agriculture is very specific because we often find that the market value of land, for example, is far higher than the productive value of land. So in many cases, the farmers who are expanding and buying more land are actually paying quite a premium for the land. And this in itself will lead to an overcapitalized position. There's maybe another thing to look out for. Perhaps you actually started your farming venture during a boom period, right? And now that the industry has tapered down slightly, you find yourself in an overcapitalized position. And this is unfortunately a situation that we actually saw quite often in the game industry a couple of years ago, which was booming so much and many people entering at a high, and when the industry started to taper off, they were left in an overcapitalized position. Then sometimes, we also make acquisitions of assets for the wrong reasons. Those February month tax purchases, for example, maybe in the short term, it's favorable tax considerations, buying new tractors and stuff in February. But invariably, that can also leave you in an overcapitalized position because it may end up with assets that you cannot properly employ. I think it's worthwhile then to also speak to your accountant about your optimal capital position and how this can be best achieved. It requires smart and disciplined financial decisions to achieve this position.
Thank you so much for joining us again, Bertie Haman, Senior Manager for Agribusiness at Standard Bank. I think the one thing that I have realized in our engagements is that you need to have someone to be able to advise you on all of these things, even if it's just, to be able to talk to through all of the concepts and understand it a lot better. I'm definitely understanding it a lot better. So thank you so much for joining us here on Food from Zanzi TV, and I look forward to our next engagement.
It was a great pleasure. Thank you very much, Dawn.